As we head into the weekend, the U.S. markets are now closed, and Rezolve AI plc, trading under the ticker RZLV, finished Friday's session on October 31, 2025, at $4.29 per share. That was a solid move up, a gain of 4.90% on the day, on pretty significant volume of over 8.4 million shares changing hands. Now, for a stock this size, any 5% pop gets attention. But the real story, the one that most surface-level headlines are missing, is why it moved. This wasn't a simple, clean rally. This 5% gain comes just one day after the short-selling firm Grizzly Research publicly declared it was short the stock, calling the company a sham. So what you're seeing isn't a recovery, it's the opening shot of a war for a stock's narrative, and the price is caught right in the crossfire. The general expectation, the story Rezolve management is actively promoting, is one of explosive growth in the artificial intelligence commerce space. This is the narrative of a company that just went public via a SPAC and is now telling the world it's on a clear path to a $150 million annual recurring revenue run rate by the end of this year, 2025, and an almost unbelievable $500 million annual recurring revenue exit rate for 2026. They've announced partnerships with giants like Microsoft and Google. They've put out press releases naming a client list that includes global brands like H&M, Ferrero, and Urban Outfitters. They reported first-half 2025 revenue of $6.3 million, a 426% jump year-over-year, with a stunning 95.8% gross margin. On paper, this looks like the next big AI winner, a company building the indispensable infrastructure for the age of agentic commerce. That's the expectation. The reality, however, is a much darker, more complex, and frankly, a much more dangerous picture. This stock is one of the most contentious battlegrounds on the market right now. That 5% pop yesterday on 8.4 million shares isn't just bulls buying the dip. It's a tug of war. On one side, you have the company's aggressive guidance and analyst price targets that average over $9. On the other side, you have not one, but two devastating short seller reports and a cascade of class action lawsuits. The rally yesterday was a direct defiance of the Grizzly Research report. But let's not forget the first bomb that dropped on September 29th from another short seller, Fuzzy Panda Research. That report sent the stock plummeting 15% in a single day. Fuzzy Panda's allegations are severe. They claim the company is faking ARR growth by acquiring failed AI startups. They allege that the company's 2024 revenue wasn't from AI at all, but was less than $190,000 from soccer ticket sales. They claim the proprietary LLM is nothing more than a ChatGPT wrapper. Grizzly Research piled on, calling the company smoke and mirrors and drawing direct, damaging comparisons to the CEO's previous company, POA Technologies, which spectacularly collapsed. So the stock's recent movement is pure, unadulterated volatility based on this conflict. The drop in late September was the short thesis landing. The subsequent chop and yesterday's 5% pop is the market trying to digest this. Is Rezolve AI a massive fraud, or is it the victim of a coordinated short and distort campaign? The trading volume tells you that big positions are being taken on both sides. Adding to the intrigue, on October 10th, the company announced a transfer of 10.6 million shares from an estate linked to the CEO to a new global institutional investor. The company framed this as a positive, welcoming a new long-term partner. But in the context of two short reports, you can be sure that skeptics are questioning if this was a structured, quiet way to distribute a large block of shares before more bad news could potentially surface. This is the kind of institutional move that both bulls and bears will point to as proof of their own thesis. This is where we have to look deeper, beyond the press releases and the short seller headlines, and into the market plumbing. This is where it gets really interesting for investors who want to understand the mechanics of this fight. The stock is, without question, under intense short seller pressure. As of the last report, there are 11.55 million shares held short, which represents about 7.73% of the company's float. That's a significant, but not astronomical number. The days to cover, a metric of how long it would take all shorts to buy back their shares, is only 1.34 days. This is quite low, and it suggests that a traditional short squeeze, where shorts get trapped and are forced to buy back, is not an immediate, obvious catalyst. They can, in theory, get out of their positions relatively quickly, given the high daily volume. But the real story isn't the short interest percentage. It's the cost and the settlement data. The short borrow rate fee, the interest rate short sellers have to pay to borrow shares, has been high. It was over 18% in mid-October, and while it's come down to around 9.7% recently, that's still a very expensive to hold short position. It shows there is persistent demand to bet against RZLV. But the smoking gun, the data point that has retail investors on platforms like Reddit and X screaming manipulation, is the fails to deliver data. In late September, right around the time the Fuzzy Panda report hit, the FTDs on RZLV exploded. We are talking about millions of shares, peaking at over 7.9 million shares failing to be delivered on a single day. Fails to deliver at that scale are not normal. It's a massive red flag that can point to settlement system failures or, as many retail investors suspect, a sign of naked short selling, where shares are sold short without being properly borrowed first. This FTD spike is the core of the bull case for many retail investors who believe the stock is being artificially and illegally suppressed. So how can you, as an investor, track this and react responsibly? First, you need to know where to look. You can find official short interest data published by NASDAQ twice a month. For borrow rates and FTD data, you'll need to use paid services like Fintel or Ortex, or you can find the raw fails to deliver data published by the SEC. When you see a borrow rate spike, it means demand to short is high. When you see FTDs spike to the millions, as they did with RZLV, it signals extreme stress in the stock's settlement. Now, what's the actionable step? It is not to blindly jump in and fight the shorts. That is how you get burned. Chasing a squeeze, especially with a low days to cover, is a gamble. The responsible reaction is to recognize that the FTDs and high borrow fees confirm the stock is a battleground. It means the price is not trading on fundamentals. It's trading on warfare. Any position you take, long or short, carries an abnormally high risk of a sudden, violent move against you. What's your take on this? Comment below with your position. Are you buying RZLV based on their $500 million guidance, or are you staying away because of the short reports? Looking at the company itself, if we strip away the drama, what does Rezolve AI claim to do? Its core product is the Brain Suite, an AI platform with components like Brain Commerce and Brain Checkout. They also tout their own Brain Power large language model. The business model is primarily subscription-based, charging enterprise clients for access to this AI technology to power their e-commerce and customer engagement. The company's projections are built on this model, claiming they can sign up hundreds of enterprise customers to multi-year, high-value subscription contracts. This is the model that produced the $6.3 million in first half 2025 revenue and the 95.8% gross margin. On paper, this looks like the next big AI winner, a company building the indispensable infrastructure for the age of agentic commerce. That's the expectation. The reality, however, is a much darker, more complex, and frankly, a much more dangerous picture. This stock is one of the most contentious battlegrounds on the market right now. That 5% pop yesterday on 8.4 million shares isn't just bulls buying the dip. It's a tug of war. On one side, you have the company's aggressive guidance and analyst price targets that average over $9. On the other side, you have not one, but two devastating short seller reports and a cascade of class action lawsuits. The rally yesterday was a direct defiance of the Grizzly research report. But let's not forget the first bomb that dropped on September 29th from another short seller, Fuzzy Panda Research. That report sent the stock plummeting 15% in a single day. Fuzzy Panda's allegations are severe. They claim the company is faking ARR growth by acquiring failed AI startups. They allege that the company